New research from RBC shows that buying a home in Canada has never been so unaffordable. For more, we are joined by Robert Hogue, Assistant Chief Economist with RBC and author of the report. Thanks so much for making time, Robert.
Well, thanks for the invitation.
So we were struck by your graph in your report that shows the percent of income required to buy a house in Canada. We'll bring it up. I wonder if you could just tell us a bit about what we're really looking at here.
Right, and I mean those costs, those ownership costs, have really spiked over the past year, and especially over the first 2 quarters of this year. Obviously, the very sharp increase in property values during the pandemic have contributed, but more recently has been the spike in interest rates that have really blown up the monthly payments, for example, if one were to buy at today's price. So, it was the prior quarter, we thought, things are shaping up that we're likely to see the worst affordability measure that we've ever recorded. And here we are today that we've kind of broken that record that was there since the early 90s. So really, and I'm sure it's no surprise to anyone, especially in Ontario and BC, where the pressure has been intense on buyers.
So what we were looking at there, though, being 60% of your income would be going for on average for Canada would be going towards your home ownership costs.
Right, and then when you go look across the country in markets like Vancouver, I mean, it's 90%, and in the Toronto area, it's more than 80%. So now, obviously, the more expensive markets are where the tensions are more intense. But what we've seen, though, is the higher interest rate affect everybody across the country, and we've seen affordability deteriorate across the board, although the degree of affordability varies considerably from market to market, with some markets still, I would argue, reasonably affordable, for example, out in the prairies and parts of Atlantic Canada. So it's a very, very picture still.
But 90% in Vancouver, Robert.
Right, and what it really means is, I mean, people obviously don't pay that, but it's really, our measure is about those who are in the middle of the income distribution. If they were to buy today at today's price and today's interest rate, they would obviously not be able to afford that typical home. So it's no surprise to see more of the activity having shifted towards the more affordable options, like condos, for example, and also the movement towards the smaller market that we've seen during the pandemic.
So you had already been expecting this affordability measure to have peaked, and then it got worse, and now you're expecting that it could still get worse from here.
Right, because we haven't seen all of the increase in interest rate that really being reflected in those numbers. So probably over the coming months, this is where hopefully will be the peak on affordability, and then thereafter now we're seeing prices starting to soften in many parts of the country, and quite substantially, and in Ontario and in some parts of BC as well. So eventually that will be part of will bring some relief to buyers. Now, probably not overnight. It's probably not going to be over the next few months, but by the early stages of next year, we should be starting to see a little bit of relief on that front.
So potentially this affordability crunch leading to lower prices, which maybe makes the affordability situation a little bit better.
Right, and to get there, though, the housing correction will continue, right? And this is part of the process, how markets adjust to the intense the factors under stress, right?
How much do you think prices could fall from here, Robert?
Right. Well, our view is that for benchmark prices, the peak to trough will be approximately 14% overall in Canada. Obviously, there will be significant variation across the country. But that would really rank as a significant correction. Looking back in the prior four national housing downturns, that would be this one would be the most significant.
And this affordability measure, where do you see that sort of leveling out when prices start to potentially ease more, like you're laying out there? Where do you think the affordability measure could end up sort of settling?
Right, and we've taken a quick peek at this, trying to simulate what it would look like, but only to the end of next year. And then we do expect that starting early next year, some of the spike will be reversed, but not fully. Probably a third can be rolled back by the end of next year. But I would still leave the housing affordability is still very stretched for most buyers at that point. And obviously, the market will remain under significant pressure, probably all the way to 2024 and possibly beyond.